Debt problems around the globe. Is that trouble overseas actually good news for our debt here at home? The man to ask when it comes to treasuries, Robert Kessler. He's here, CEO of Kessler Companies, and he joins us now. Is that true, that all the troubles elsewhere will help us and our treasuries for years to come, potentially?
Well, to some extent, because we're kind of the least worst of things that are bad out there. Today is a good example. Every day we get a new headline. Today's headline is China. Yesterday's headline was Greece. The market was up 100 points yesterday. Today the market's down 100 points. So we're in a marketplace that's really dealing with crisis after crisis after crisis. And these crises, or recessions, tend to last about 10 years. We're into the second, third year, so we're really at the beginning of it. And what we're seeing is one after the next, and that means that if you get away from risk assets, you probably want to go into something less risky like treasuries.
So if things get worse globally, could that help finance our deficit?
I think it number one, helps finance the deficit because this is the safe haven. But what's even more important is Americans, as we notice in our auctions, the direct bids are becoming Americans buying more treasuries, which we always did in the past. So as the Americans finance our own debt, which is what we're seeing, a shift in savings, then you have, in a sense, like Japan, you don't really have an inflationary problem. You're paying for it yourself. So if we really want to increase stimulus and really want to increase how we spend in this country, then we're going to have to pay for it. And the right people to pay for it are Americans.
We got to about 8.5% of household wealth, right, was in treasuries back in the 1950s. How much more supply, demand does that imply from U.S. households for treasuries?
8% is an enormous number. That was the 50s. We were down to 1%. If we simply go back to 4%, we would finance the whole debt right here. We wouldn't certainly need China. And we didn't have China during the 80s, and we didn't have China or anyone else as we financed the debt during the Great Depression. One of the things that people talk about all the time is deficits create inflation. Now, we always hear that. What about this big deficit and the inflation it will cause? There is no evidence of that. Certainly Japan has had a deficit for 20 years, and they're running deflation. We had a deficit in the United States, certainly during the Depression, and it wasn't until the 40s before we even began to see a little bit of inflation.
Japan hasn't printed the level of money that we are.
Yeah, they actually have a bigger percent of their GDP than we do, so we have to do it proportionately. And then the question is, how are you spending the money on the deficit? There are productive deficits and there are non-productive deficits. We don't seem to have a very productive deficit at the moment, but certainly we need a deficit if we're going to create GDP for the job growth that we need in this country, which we know we have 8.5 million people unemployed, and that's probably the low number. It's probably closer to 17 million people.
Well, I was looking at the dividend yield on the Dow Diamonds, and it's about 3.1%. So assume over the next decade, even if stocks went nowhere and the dividend yield creeps back up a little bit, wouldn't that be a better place for your money, particularly when you factor in taxes, than treasuries?
The Treasury market's really interesting at the moment. A lot of people feel that we're in a bear market in treasuries. Wrong. Most of the world has been buying treasuries and financing short-term treasuries. My guess right now is that the 10-year treasury looks the most attractive of any security at roughly 3.7%, mostly because there are so few of them. Oddly enough, only 10% of the U.S. debt is a 10-year treasury, less than $600 billion of the $6 trillion. So we have a very small number of 10-year treasuries. If, in fact, we're not going to have inflation over the next 5, 6, 7, 8, 10 years, then a 370 looks a heck of a lot better than that S&P number, especially since it's absolutely guaranteed. And in a risk-adverse world, you certainly want to have things that are not going to blow up.
There's the huge balancing act, right? I mean, we were noting on the show this week, 330 people in this country turn 60 years old every hour. The demographic shift is actually mind-blowing. I don't even want to think about it, right? Now we've got the deficit on top of that. Inflation eats bonds. It just kills them, right? But you got to have a lot more people relying on fixed income as we age. How do we balance out that demographic shift at the same time as trying to control inflation?
It is the most serious problem certainly Japan has. as the demographics.
And they've had 5 recessions in 15 years.
And you're absolutely right. The average age of those baby boomers now is 55, 56 years old, so we're all going to become more serious savers. All of that's true. But the process that we're in of shifting our savings into more serious risk-adverse areas, such as treasuries, probably forestalls a lot of these problems. The other thing is, last but not least, about the question of inflation is, oddly enough, inflation is a very, very, very lagging indicator. We see the lows in inflation someplace 2 to 3 years after the recessions. So I don't think you've seen the low in inflation. I think deflation is still the problem in this country as it is in Japan and as it is throughout the world right now.
On that note, how far out would you go in a treasury?
Well, I think the next year looks good. I think when people say, I wouldn't buy a 30-year treasury because it's a 30-year treasury, that's ridiculous. Well, you can buy a 30-year treasury for 1 year. I think the 30-year treasury looks certainly good for the next year or 2 or perhaps 3. I don't know what it will look like in 30 years. The 2-year treasury has been the best buy by the banking industry in the last 2 years. So treasuries have been the best buy and probably will continue to move up in that category. And they're under-owned. That's another big issue here. So they're kind of interesting.
Well, we always have so much to talk about, but more time next time. Robert Kessler, was terrific to see you.
Thank you very, very much.
Thank you so much.
My pleasure.
Kessler Company.